Hello, agents. Hello, everyone, and welcome to 2024. Today, the 10 years at 4.03. So we're holding rates there, but today what we're going to talk about is the 4 fixed annuity elements to know for 2024. So 4 for 24. So let's go ahead and jump right into this. 4 things, 4 elements to know for 2024. We're going to start with number 1, and that is the contractual minimum guarantees, folks. These things are up again. Another increase in the minimum guarantees for 2024. Good products now at a 3% minimum again, which is the strongest guarantee in the contract, right? History, looking back, that tells us why it's very valuable is because let's look back in the 2000s. If someone bought something, say in 2007 for say 8 years or something, it's a decent rate of in the mid 4s. Well, that thing matured, may have had a minimum guarantee of 3%. Guess what? That thing stayed in force all the way until now. So that was how strong it was. The person maybe bought an 8-year annuity and kept it for 15 years. That's very much something we saw because the minimums were so strong, they couldn't go anywhere else and beat it, not without locking up for extensive periods of time. So 3% minimum, that by far the strongest guarantee in the contract. And let's take a look at this deeper. This is a current rate we have. It's $580 for 5 years with a 3% minimum. This is what it looks like. See, $580 for the first 5 years. Then the client has no less than 3. So at the end of that 5th year, they have that window to decide. So they can move if rates are higher than 3, move, or if this company's offering more, stay. But then they know the minimum they can get is 3%. So you see that in the account value, it balances off at 3. And remember, this contract minimum guarantee value is assuming that you break the deal with the insurance company and have the highest possible charges in the worst possible environment. So that's what that column's there for if it throws you off. But if you look at the accumulation and the cash surrender right here, these 2 columns right here, 132, 565, 132, 565, match off. You have a 30-day window. A lot of those do that now. But the strongest thing is that 3% minimum guarantee. Strongest guarantee in the contract. Like I said, people have had out of surrender products for a decade and didn't have to touch it because it had that strong minimum. So next is access. Okay, so the government has been doing tightening on loans and money. So money's tightening. Higher cost of living is coming, right? And is currently, right, we have inflation. So this can increase expenses more than some people may expect, even in the worst case scenarios that they were expecting, right? So the possibility that clients need access to this annuity may increase going forward. So in the past where you may have not took withdrawals or whatever, but money was cheap, here we have free withdrawal provisions of anywhere from 10 to 15% available, or cumulative interest, which means if you don't take it, say if you have 5% interest rate, you don't take it for 4 years, you've grown 20% plus of cumulative interest, which you can withdraw. So these withdrawal provisions that avoid surrender charges are really valuable, especially if interest rates take off too, and you want to access some of the money to put it somewhere else because interest rates are even higher. But there's an emergency, you need access. So you want to make sure you have some access to these policies of greater than just the simple interest, stripping the interest, unless you're taking that as an income, of course. So suitability is going to be a big talking point this year. There's already everything I'm reading on LinkedIn and stuff is all DOL related. And I'm going to do a video on what a mess they're making of that too. But yeah, it's a mess they've made of suitability. I mean, FSD over here, us at annuityexperts.com, we've always been like into suitability before suitability was made popular by other people. And what they did with suitability has really switched from the client to the company. What's more suitable for the company not to get sued, for the company not to have any problems? Even if it's a great deal and in the best interest of the client, the company might deny it because they're like, well, we could run into trouble, so no. So that's where suitability, I think, has become a mess and transferred the risk from the client or from the insurance company to the client in these cases. So the powers that be, they talk best interest, yet when it comes time to act, the opposite is happening regarding stuff such as hardships, how they're handled in certain cases. You're talking how to beat this stuff. The main answer is you want to be client oriented. You want to focus on the guaranteed values, and you want to document the reasons for your suggestions of why you're buying annuity. So document, you're going to have good reasons. You're selling good products. And remember, these products, some products out there that get the bad rap have these 14% bonus, 9% commission, 10%, 10-year plus surrender charges. You got to wait to vest these bonuses. Now, all these products have been approved by the state. So, they're pushed by broker dealers and RIAs to get these kind of different products approved and stuff, very limited on where you're going to use those higher products. There is a place I bought one for myself, with a big commission, big bonus, because it had to fit a specific need, but I didn't put all of everything asset into that. So yeah, suitability is going to be a big thing. Again, client oriented, highlight the guarantees, not the assumptions, document your stuff. Document your reasons, document the current environment, because, years ago we would have put someone in 3% for 5 years, and that might not look good today. But back then people thought interest rates were going negative. A lot of clients are like, oh, they're going negative like Japan and all this. So they wanted to lock in 3%. They thought that was a great deal. It just, you never know. So the environment, you also want to document the current environment you're making these suggestions in. It's very relevant because the environment may change. As we saw here, within 12 months, everything changed, right? Historically changed. And then lifetime income. There's so much noise in the lifetime income, which is great because it used to be the most negatively talked about product. If you die, the insurance company keeps your money and all that nonsense. Everything to not have people look at lifetime income. So looking at lifetime income, I'll tell you, it's 100% satisfaction rate. I've done some videos on this. It's a guaranteed, it's peace of mind for these people. All that great stuff. Longevity protection. And now it's even being stated as, hey, this should actually be part of a plan, your guaranteed income side. It makes these plans more valid in the long run, makes them more stable in the long run for what their purposes are. So anyway, let's jump into that. That's it. Those are the 5. So let's look at MIGAs currently. This was as of January 8th. So the 1 and 2 year closed because interest rates reduced. So we went from treasury near 5 to a treasury at 380, and they closed the 1 and 2 year products. They just yanked them off the shelf. The 3 and 4 years right now are anywhere from 5 to 5.5% guaranteed locked in. Again, you want to shop that rate. 5 and 6 years, we did have a 580. I don't know how long that's going to stay, so I just dropped it to a 570 to 530. That's our good range. 530 is probably the best product. No MVA, walk away, A+ company, 10% withdrawals. I love that one. 3% minimum guarantee. So there's a really good 5 year if you need a high quality product. The 7 through 10 years not as attractive, except for maybe that 6% for 10 years. That's kind of attractive. However, it's a B++ company. So be aware of your ratings and financials, claims paying ability as strong as the company is, right? But it's a good company. I've used them. I personally own one. I like the 6% for 10. It's out there. If you guys are interested, agents or your clients need a good, long-term lockup, on that. So yeah, any of these rates though, above 5%, you want to make sure you look for the minimum of 3. There's no reason to take a 550 over a 540 when you got a 150 minimum versus a 3. So you also want to look at the minimum guarantees right now when you're shopping for these SPIAs out there. Very important, the most important, strongest guarantee in the contract. I cannot stress that enough. SPIA is down from November's high. November was by far the best rate. So if you want, you can go back and look at some of my old videos, funding $40,000, how much it costs. So currently this month, a 55-year-old male can get that for $40,000 a year for $622,000. A 75-year-old can do it for $429,719. And this is 100% guaranteed return of principal. So if they die early, the insurance company doesn't keep your money. It'll keep paying it to the beneficiaries until the full premiums you see here have returned to the beneficiary. If the client is alive after these premiums have been received, it'll keep paying. But then when he passes away or the client passes away, he or she, then it ends. So it'll only return your deposit, but will pay for as long as your life. So it's like a 0% guarantee interest rate if you die early, but it's exponentially huge should you live to 100. So longevity protection. These things are not for, making money up front. These are for long-term. Where else can you take $40,000 as a 60-year-old on 585 and never run out if you live to 100? That's what it's for. Good luck with that anywhere else. This is guaranteed. And this is with an A+ rated company as well. These incomes begin 1 month after the premium is received. No delay, 1 month. You deposit the money. 1 month later, you start receiving your check, direct deposit in your account. These quotes are based on non-premium tax states. Some states will charge a premium tax, which will cost you a little more to buy that $40,000 of income. Next is these rates. I ran these on 1-3. These rates were good for 14 days. They are subject to change and they are going in the downward direction, maybe holding now that the treasury has balanced out. So these rates, you may find close to these numbers again, as long as that treasury stays near that 4% rate. Then they don't change life expectancy and stuff like that, right? Yeah, so shop that income, shop around, make sure you're getting the best. This is just one company I ran because I can't run all 30 companies, but they're highly competitive. But when we get the exact situation, your date of birth may change it. If you're closer to the next age, one company may roll you up to the next age, where one company may roll you down to the younger age. So it's very important to shop your date of birth and all that good stuff in your state and all that good stuff. Okay, this video is getting a little long, so let's just go over the 4 things to know for 2024. Contractual minimum guarantees at 3%. Make sure you get a high minimum. Access. Are you going to have access? 10% free withdrawals. Cumulative interest withdrawals. Suitability. Focus on guarantees. Do not highlight the assumptions. Do not sell the assumptions. Document what you're doing and why you're making the suggestions. And note the current rate environment and the current environment overall of why you're making those. So all that for suitability. And then lifetime income. Hey, you want a guaranteed income for life. You want to use less money to fund it to get your same $40,000 a year. Use the SPIA. Guaranteed day one. It has all the protections of a SPIA. All that good stuff. And if it's non-qualified money, guess what? You get a tax exclusion ratio on that stuff into your life expectancy. So it's a really win-win situation with the highest customer satisfaction among all annuity lines. So, yep, that's that. Here is some disclosures. That's the end of my presentation. Yep, that's the end. Sorry it went so long. For the most up-to-date information, follow me on LinkedIn or on YouTube. And that's great. I hope you're all having a wonderful start to your 2024, and we'll talk to you soon. Have a great day. Bye-bye.